It's your boy Sack coming to you with today's stock pick. Remember, this channel is all about no face, just facts in less than 5 minutes. Let's get started. Today we're talking about ENHA, also known as Enhanced Group Incorporated. And this stock comes with a major warning sign attached to it: buyer beware. Now, anytime a stock drops nearly 50% in 1 month, investors immediately start asking the same question: is this a buying opportunity or a falling knife? And with ENHA sitting around $5.44 after dropping more than 47% over the past month, that's exactly the situation we're looking at right now. Enhanced Group Incorporated operates in the sports performance and wellness industry. The company focuses on products tied to athletic performance, recovery, and health support. On paper, that sounds attractive because the wellness and sports recovery market continues growing every year. More consumers are spending money on fitness, recovery products, and performance enhancement than ever before. But here's the reality investors need to understand: a good idea doesn't automatically make a good stock. The market rewards execution, consistency, and growth. And right now, the chart is showing that investors have concerns. When we look at the technical setup, the first thing that stands out is the massive breakdown candle on the 1 month chart. That kind of move tells me sellers took control aggressively. Usually, when you see a stock collapse that quickly, fear enters the market hard. Traders start exiting positions, momentum disappears, and confidence weakens fast. After the sharp sell-off, ENHA attempted to stabilize, but the bounce has been weak. That's important because strong recoveries usually show aggressive buying volume and powerful momentum candles. Instead, this chart is showing hesitation. Buyers are stepping in carefully instead of confidently. Technically speaking, the stock appears to have support around the $5 level. That area matters because if ENHA breaks below that zone, more downside pressure could follow. On the upside, resistance appears near the $7 to $8 range where previous sellers stepped in heavily. And this is why I'm calling this a buyer beware setup. Stocks like ENHA can become extremely volatile. One day they might rally 20 or 30%, and the next day they can erase all those gains instantly. Small cap and lower price stocks often move emotionally instead of fundamentally, which creates dangerous conditions for inexperienced traders. A lot of retail investors make the mistake of thinking a stock is automatically cheap just because the share price is low. But cheap stocks can always become cheaper. That's why risk management matters so much. One thing I always remind people is this: if a stock falls 50%, it actually needs to climb 100% just to get back to break-even levels. That's why protecting capital is more important than chasing hype. Now, does this mean ENHA can never recover? Absolutely not. Sometimes heavily beaten down stocks end up producing strong rebounds if the company delivers positive catalysts. Maybe the company improves revenue growth. Maybe earnings surprise investors. Maybe management introduces new partnerships or expansion opportunities that restore confidence in the business. But without major catalysts, stocks can stay weak much longer than people expect. So what would I personally need to see before becoming bullish on ENHA? First, I'd want to see stronger buying volume returning consistently. Volume tells you whether institutions and serious investors are stepping back into the stock. Second, I'd want to see higher lows forming on the chart. Right now, the trend still looks unstable, and until the stock starts building a stronger technical structure, traders are going to remain cautious. Third, I'd want to see proof the company is improving operationally and financially. Hype can move a stock temporarily, but fundamentals are what sustain long-term momentum. And honestly, one of the biggest lessons newer investors need to learn is patience. Not every stock deserves an immediate buy. Sometimes the smartest move is simply watching and waiting for confirmation instead of forcing an entry. Right now, ENHA still looks risky. Momentum is weak, investor confidence appears shaky, and the chart hasn't fully recovered from the recent breakdown. Could it bounce? Absolutely. But until the technicals improve, investors should approach this stock carefully instead of emotionally. This is not financial advice, but if you're looking at ENHA, make sure you have a clear plan before entering any position. Protect your downside, manage your risk, and never let hype make decisions for your portfolio. If you enjoyed this breakdown, hit that like button, subscribe, and comment some stocks you want to hear about as we start our journey to 10,000 subscribers. This is Stocks by Sat06. No face, just facts in 5 minutes. I'll catch y'all in the next one.